Hello everyone and welcome to my channel. So today's video is actually very important for me. Okay, so I don't want to forget that we are 3 days away from the closing of the monthly candle, and from a monthly perspective I told you that the next months will be bearish for me. Okay, and also we took this low and we closed below it. Okay, so since we took this low and this high was in a weekly void and in a bearish monthly 3 months bearish order block and 6 months bearish order block, so I was anticipating the next monthly candle to be bearish. Now to be bearish into these areas and into the 50% which aligns with this low right here, into this fair value gap. Now what I usually see on Monday is a type of consolidation. So from a weekly perspective, we are below this low, so we had a shift in market structure, in my opinion, and we yet have to work into some lows right here. And plus, we did not yet form any wick below this area for the weekly candle, so there is a high probability that we see now push into this low since we are retracing on Monday. Now, going into the daily charts, this area right here is important for you. Okay, so we closed below it, we retested one more time, so there is a high probability that we push into an area, then we see break into this low right here. Now usually Monday is a type of consolidation. So for example, if I take this Monday, you can clearly see that Monday did not take not previous days highs nor lows, and we closed bearish. So there is a high probability that we take this low right here, and this is what happened in the next day. Also, previous week, this Monday, we did not form any wick from the bearish side, plus we closed bearish. We did not sweep liquidity from any side of the previous day's candle, so there is a high probability that we are bearish during the next candle, so which is Tuesday. Monday, we opened, we rallied right here, and we took the previous week low. So this is not a consolidation. Now, going into this Monday, you can clearly see that we were bearish into these equal lows right here and into this order block right there. Okay, so there is also the mean threshold of the order block not hit yet. Plus, if I want to take the order block, I need to see 10 to 20 pips below it. So we are actually mitigated this order block, in my opinion. Now, Monday is consolidating and it's consolidating with a bullish candle. So what I will be anticipating for tomorrow is for this high to be raided. Now, I want to mention something. If this high, let's take an example of previous week. If the high of Monday is raided before the London session or during the London session, there is a high probability for a reversal pattern to happen and the weekly will be bearish. Okay, so if we open on Tuesday and we take the high of Monday before we form a wick to the downside, there is a high probability that we are bearish on Tuesday. So what I will be waiting, I will be waiting for Tuesday to open, and I want to see if Tuesday opens and takes the low of Monday before it reverse to the upside. So on Tuesday I am bullish and I want to anticipate previous day's highs to be taken. But if I open on Tuesday and we rally to the upside taking Monday's highs, so I would be anticipating for a reversal to happen and we start bearish into the previous day's lows. Now I need a high probability and I need an anticipation for tomorrow, even though I might have a wrong anticipation, but I need to have an anticipation for tomorrow's candle. Now, since we are in a bearish momentum and we have this high right here with this low right there, plus we worked into it and Monday was consolidating, so there was nothing important on Monday. So now what I will be anticipating for tomorrow is very, very important. I go to the daily chart. As the previous week, if I take this high to this low, you can see that we worked into the 50% area, then we rallied to the downside, taking previous highs lows. So what will happen is that I have this swing formation right here. I have a previous wick lower than this wick, and right here a wick lower than this wick. So this is a swing high, and right here we right now are forming a swing low. So we have this low to this high, and we have the 50% area right there. So this is an important level for me. Let's delete everything. So this is the 50% retracement area of this move right here. So now, also, I want to mention that if we are distributing right now, we have one move, second move, and we might anticipate third move into this low, so we can have the something that ICT talks about, the three-step drive. Okay, so if we are distributing, you there is a high probability that you see a three drive move. So one, two, and we might anticipate one more. Now, this is the 50% retracement area of this swing high and this swing low. Now, if I go to the hourly chart, on Friday there was a very powerful wick to the upside. So, if I take the consequent encouragement of this wick, so the consequent encouragement of this wick is the midpoint of this wick. So as you can see, this is the midpoint of this wick, and if I take, so there might be some go to the side. Okay. So as you can see, these two are not even one bit uh, separate. Okay, so it's perfectly aligned with each other. Then we have the previous day, so Monday's high, which is a very important high also, and we have the opening of the new candle. Now, what I will be anticipating for tomorrow. First of all, I have these equal lows right here. So there is a lot of sell side liquidity right there. Plus we are having a movement to the upside. So there will be a lot of sell stops right there. Plus now we shifted structure right here. So people might bring their sell stops into this area. So right here at this area, we have a lot of sell stop. So what I will be anticipating for Tuesday, I will be anticipating Tuesday to first let me mark the points that are very important for me. I have this point right here, and we have previous day lows. Okay, so this will be a previous 2 days low. Okay, so it will be in red. So these are very important targets for me for tomorrow. Now, what I will be anticipating, I will be anticipating, for example, if we opened right here on the Tuesday's candle, I would like to see pushing into this area right here, and I would like to see shift in market structure during London session pushing to the downside. Then when we hit the Monday's low, I would like to see a small retracement, then pushing during New York session into our target right here. So then after New York session hits this area, I would like to see some type of retracement to close the day. Now, this is some type of anticipation for tomorrow's Tuesday candle formation. I would like to see us opening, rallying above the 50% daily retracement level, the 50%, the consequent encouragement of this wick right here, and the buy stops of Monday's highs, then pushing into equilibrium. So this is the low of the Monday, pushing into the low of Monday, retracing into the 50% area of this movement right here. So we might retrace into this area, then we start pushing to the downside and then retracing a little bit to close the day. Okay, so this is my anticipation for tomorrow. My anticipation might be wrong, okay, but I will keep this in my mind. Plus, I would have another idea. If we opened, took the lows of Mondays, and we retraced into the 50% area of this movement right here, okay, or into the optimal trade entry, and we took Monday's low, and I saw a shift in market structure during London session, there is a high probability that we are attacking Monday's high, retracing a little bit, and going into the consequent encouragement of this week, and then going into the high of this week. So there is two scenarios that could happen for tomorrow. I will see how we will open. I will see where we take liquidity first. So Tuesday's open is very important for me. If we push above it, so we are above equilibrium, I will anticipate price and day to be bearish into these sell side liquidities and into Monday's low. If we open, this is my equilibrium, the opening is my equilibrium. If we open and we rally below the opening of Monday into a 50% retracement area of this movement right here, I would anticipate the daily Tuesday to be bullish into previous day's high. So the opening of the candle is very important. I want to see the power of three movement happening. It's very important for me. Then I have a lot of other confluence, but the first setup is in my mind a higher probability since we have approximately perfectly equal lows right here. So we might target these equal lows right there. So I wanna see opening, push, then during London session reversal, hitting this area, then during New York session retracement, and then during also New York session push into these equal lows. So this is my tomorrow's anticipation. It will change based on my opening of the Tuesday's candles. Okay, so it's very important idea for me because now I have a clearer idea of how the next daily candle will form on a lower time frame. So this I am working on an hourly time frame. So this is an idea how the daily candle will form on an hourly time frame. And why do I have this idea? Since I started marking the equilibrium of the day, everything changed. So this is, for example, on Thursday. This is my equilibrium. I have this powerful push to the upside. I have previous day high. Equilibrium. We opened, took previous day's highs. I waited for London session. London session had as a shift in market structure to the downside. Perfect. Perfect. Entering. Where are my targets? Previous day's lows. So one of my targets is right there, and another target is right there, which I didn't hit, but it was with my daily bias, aligned with my daily bias. If I wanna go into Friday, which is usually a consolidation, okay, after a big move during the week, I would like see some type of retracement during Friday. This is the opening of the candle. When we started the day, where did we go? We went below the opening of the candle. So what happened during London session? During London session, we saw a shift in market structure for us to reach above the opening. Now, where did we reach above the opening? I had this powerful move to the downside. So where are my targets? Above this opening. We have a 50% retracement level right there. We have a fair value gap right there. We have the 62% retracement. We have the 70.5% retracement. So we have different targets above equilibrium. Okay, although it might seem like a counter trend trade, but it's a daily candle formation. So since I am an intraday trader, I'd like to know and to anticipate how daily candles form. Then this move happened during a London session during news. After news, since we retraced into the optimal trade entry area, into the fair value gap, into the 50% retracement area, where did we target next? We targeted the sell side liquidity, the low. What happened after we took the low? There was a shift in market structure going to the upside. Now, where are my targets going to the upside? I have the 50% consequent encouragement of this wick. I have the 50% retracement of the daily swing high and swing low. So there is a lot of targets to hit, okay? But during Monday now, we are engineering liquidity and we shall see how we will open on Tuesday. If we took the low of Monday on Tuesday, I would anticipate bullishness during Tuesday. And if we took the highs on Tuesday opening, I will be anticipating bearishness into previous days lows. So this analysis is very important for me because it gives me a framework to work within in tomorrow's sessions. So tomorrow I will be recording the trade that I will be taking. I will record my entry because it's an intraday trade, so it can go up to 3, 4, 5 hours, and it can go even up to 1 hour, just 1 hour. Okay, very fast trade if we have very powerful momentum. So what I will be doing, I will be recording my entry. I will be recording the analysis before 15 minutes of my London kill zone because I don't take trades before London kill zone. I will be waiting for my London kill zone to enter a trade. I will be analyzing the opening of Tuesday when we open before London kill zone to see what I'm anticipating to happen during London kill zone. Then I go to the lower time frame, to the 5 minute time frame to see if it really happened. Okay, and when it happens, I will be entering my trade on my challenge account, not on my demo account. So what I'm doing right now is I'm having fun on my demo account. I'm backtesting because I have a very big urge to go into the market and take trades. So what I did is I opened a demo account for these ideas, to have different ideas and to test different ideas and to see the results. Now, when an A plus setup forms, I will be taking it on my challenge account. So tomorrow I will be waiting for the Tuesday's Asian range to form. I will be sitting in front of the charts 15 minutes 15 minutes before my London kill zone to see where I am based off my analysis and to anticipate the movement for Tuesday. Okay, and I will be trying to take a trade during London session. I will be recording it live and just the entry live because I cannot record a 4 hour session. I will be recording the entry live and I will be recording every single time that I take partials or I exit a trade or if my trade get stopped out. And if I get stopped out, I will be analyzing the trade to see where did I do wrong and where did I do right. So tomorrow is very important for me. I have a very clear idea now of my strategy. I know what I want to see during my kill zones, and I know how to anticipate for tomorrow's trade. So this is everything for today. Hopefully, this video will be insightful and will help you. And please, if you like this video, don't forget to like and subscribe. And see you tomorrow.